Okay, good morning, everyone. Bright and early on August 9th. This is our Meet the Lenders, where we talk for about an hour with lenders that we have very good trusted relationships here that do lending, um, not just in San Diego County, throughout the state, and some obviously national as well. The purpose of this conversation is to save you time and money, help you get educated really quickly on what's going on with the market, different types of products, and overall maybe make some connections here as well. So my name is Brandon Apley. I'm the director of the South San Diego Small Business Development Center. The SBDC provides free technical assistance in the form of advising, that's one-on-one, and training, including online and in person, for starting and growing your business in all different facets. With that, we make connections with lenders in the industry that we know are well suited to provide fair financial products and are along the lines of being mission driven as well as us. We also are fortunate to have Lucy Montgomery from the SBA, who will give a presentation at the very beginning. With that, if you have any questions, I'd just say you can put them in the chat. I will be asking the lenders questions, but we definitely want to make sure that if you have a question, we can get to that as well. Before I get started, Lucy, you want to do your presentation and get us going?
Thank you so much, Brandon. We have a full group of lenders, so I'm going to go quick because these are exceptional lenders, and I really want these potential buyers and small borrowers and small business owners to have a time to ask what they want to ask and get this going. But I do want just to go ahead and clarify some things about the SBA and to give you some background so you can approach this conversation with the lenders in full knowledge. The SBA has celebrating recently 71 years of support and defense of small business. That is our absolute mission. So you should reach out to us when you need us. One of the things that the SBA has a hat for is access to capital, and that's what brings us here now. How does the SBA do this? We do what's called SBA-backed loans. So these are loan guarantees. We help with private investing, research and development award funds. Those are like SBIR or SBIR, STTR, and surety bonds. We have a great program on surety bonds. If you need a bond, please reach out to SBA San Diego at sba.gov. Send an email regarding bonds. We have help for you. How does an SBA loan work? So this is the most important thing that I want to convey in this short presentation is that you approach the small business lender. So you go directly to the lender. No need to call the SBA, to call the local office, to wait on hold for or to get the speed of Fred. You can go really fast directly through the lender, and the SBA works in the background with the lender. And this is great for the small business because what that means is that the lender can feel confident with more competitive terms, lower down payments, flexible overhead requirements, and also help you with counseling and education. So they'll be willing to take a little bit bigger risk than they would without an SBA guarantee. And we have found, and we have statistics to show that these guarantees are working, and we are able to support small businesses directly through the help of our lender partners. How can an SBA-backed loan help you? There are a variety of SBA loans. You may be able to get an SBA loan depending on what the lender offers to launch, grow, or repair. That means startup. You can get for working capital, revolving credit, to purchase or renovate, even to purchase your owner-occupied commercial property. And we have special programs for exporting. So these are the type of SBA loans, just so you're familiar with the speak. A 504 loan is our owner-occupied commercial property. Again, I note commercial property here, so this isn't for buying Airbnbs, and it's also for owner-occupied. So this would be your home office. So you want to locate your home office in a commercial building now. That would be a place so you can build an asset for your company actually buying the building. Great on those. They're possibly only 10% down, which is different than maybe a 40% down that may be required. A 7A loan is our flagship working capital loan. Under that umbrella, we also have a community advantage loan, which is slightly easier to qualify for, and kind of lower, like 350,000 and lower. You can get SBA loans up to $5 million. But I will say, this amount may be changing depending on Congress. We also have our export loans, trade loans, and micro loans, which are loans under $50,000. In the gray rain cloud, I have disaster loans. That is the only time the SBA direct lends is when there's a disaster, a flood, wildfire, something of that nature that hopefully we never have, a hurricane, and also the dreaded COVID. And speaking of that, if you have a COVID idle loan, please note it's probably time that you're paying that or making arrangements to pay that or get that under control. Please, we have made significant improvements in our web presence. You can now pay online. You can now find information without even having to wait on hold, just by making an account at www.lending.sba.gov. You can also apply for hardship assistance right online if your loan is under 200,000. Over 200,000, you can call the customer service or email them. Same thing with regard to PPP. If you haven't applied for forgiveness, that loan is actually due and payable now. Go ahead and make your application for forgiveness. The deadline's over, but still do it because you don't want this to go to Treasury or to keep you from getting a loan in the future from one of these great lenders. So there's the website, sba.gov/PPP forgiveness. You should be able to at least attempt to make this application and get further information for any PPP loan now. But forgiveness is not automatic. You must make an affirmative application. So SBA does have an online service to match you with the lender, but in San Diego, I'm not even going to keep this slide up very long because this, like I mentioned, this webinar is chock full of all different kinds of lenders from the full spectrum that you might need for your small business. I want you to start here in your community. We have done a good job, especially with this SBDC, who is award-winning, to help you get connected to these lenders. So a lender may, now Brandon's going to ask this question, what they actually require, but some may require business plans, expense sheets, financial statements, or financial projections. It's okay if you don't have these or know what they are. That's why we have resource partners and mentors to help you. And how do you find one? If you're not from San Diego, go to sba.gov local assistance. And you can absolutely, we have 1,400 partner offices nationwide. In San Diego, we have our award-winning SBDC, Regional Center of Excellence. Right here is their website. Also our VBAC, if you're a veteran, Veterans Business Outreach Center. We have SCORE San Diego, also award-winning Women's Business Center. All of these, you can connect directly and get a mentor free of charge to help you. And hopefully Marisa will put in the chat, thank you Marisa, about how to get in touch with SBDC to help you prepare for lending. And all of these lenders will probably say, they can probably shake their heads, that it's much easier to get a loan for a client that's already worked with an SBDC. So go ahead, like you can say, yes, absolutely. I just want to note, this is not an SBA program, so you can file complaints to the Treasury Department, but you do need to file a Corporate Transparency Act before January 1st, 2025. And I'm offering this information in case you don't know about it. I'll put this information in the chat as well. You must make this filing before January 1st, 2025 if you're existing to avoid any penalty. So keep that in mind. It's new. It's not SBA requirement, but it is a requirement by the government. Thank you. Please follow us on X. We post every single day new things for you to learn. We also have a newsletter which we send out periodically. You can sign up on our website. Thank you so much for the time. Thank you, Marisa. Thank you, Brandon. And thank you to these wonderful lenders who have taken the time to help you learn. And thank you, small businesses. Without you, San Diego community would fall apart. You are our backbone and our heartbeat. Thanks for the time, Brandon.
Awesome. Great. Thank you, Lucy. So let's get right into it. The first question I'm just going to throw into the chat and I'll go off of my screen as I see. So we're starting with loans and loan programs overall and eligibility. What are the types of programs, if that includes lines of credit or other types of programs that your organization offer? and what's the primary eligibility criteria as well. And then if you want, if you can talk about, as far as the type of industry that you lend to, time in business and such. We'll go with Andrew, Tarek, and then DeWitt.
All right. Thank you, Brandon. I'm Andrew Crone. I'm Senior VP, Marble Bridge Funding Group. I've been here 24 years, did sales and underwriting. Marble Bridge has been around over 25 years, California-based corporation, direct lender, have lent over, I think we're approaching $2 billion now, mainly all to small business. We are a commercial finance company by classification. Our specialty is accounts receivable finance, purchase order, and contract finance. So the clients we deal with are B2B, business to business, and they produce an invoice, or B2G, they produce an invoice, do business with the government. We work with startups. The company is about 50 million a year in revenue, and we do startups that are going to have revenue shortly. And the clients that we help, as I mentioned earlier, they produce a product or a service, and they have to invoice their clients, and they don't get paid for 30, 60, 90 days, and they're looking to increase the cash flow. We provide that. In the underwriting, if you call me, I can figure it out in a phone call, since I do the underwriting also. So we're able to figure out your business, your needs, your growth, anything that I can help you on, make you stronger on. And we're gathering financials, tax returns, all the usual stuff most of the lenders here are going to want as far as the ultimate decision. But because I do the underwriting, we usually can figure it out in a phone call. And we have no minimums, and we can lend up to $5 million a month. So if you have a business that's growing and you have to carry your accounts receivable and you're not using that receivable to help increase the growth of your business, it's a great way to go. We've taken companies 2, 3, 4 times growth in 1 year using that type of method. That's it.
Awesome. Tarek?
Good morning, everybody. My name is Tarek Ahadi. I'm a Senior Relationship Manager at US Bank. From our perspective, we offer a full range of different lending products. Our typical requirement is that you've been in business at least 2 years. We don't really offer startup financing. I'm very fortunate because I can partner with some of the peers that are on this call today when it comes to those kind of things. Typically, our minimum sort of FICO requirements are 660. We can help with a range of different lending products. So they can be conventional loans, SBA loans. We have a manufacturing division within US Bank. We can help with equipment finance, along with all the the full suite of banking products. Thank you.
DeWitt?
Hey everyone, I'm DeWitt. I'm from Pacific Premier Bank, and I'm the Senior Vice President and Director of Commercial Banking for the bank. Types of loan programs we offer, it starts as little as $50,000, whether that's a loan or a line of credit, and goes all the way up to north of $100 million. At the kind of lower end of the spectrum, one product that we have that starts at $50K and goes up to $150,000. Internally, we call it a quick score line of credit or a quick score term loan. It's designed to make accessing up to $150,000 very easy for business owners. So if it's something as small as $50K, it could literally be just a 2-page application. Something up to $150,000 might be a 2-page application, most recent business tax return, most recent year-end financials, and a couple of bank statements. Those lines or loans could be used for working capital, buying some equipment, could be buying out a partner. There's just a multitude of uses for it. Everything above $150,000 we fully underwrite, which typically means 3 years of taxes, 3 years of financials, personal financial statements. And stuff above $150,000, it's all very much customized to what the business owner is looking for. So we could do, lines of credit, term loans, loans for partner buyouts, loans for partner buy-ins, business real estate financing, business acquisition financing, construction financing. As far as industries that we lend to, we're pretty industry agnostic, so we bank clients from virtually every industry out there. We are a federally chartered bank, so no illicit industries, so no cannabis. but we can do CBD. But haven't seen a lot of that come across my desk lately. Do we do loans to startup businesses? No, the minimum with us is a 3-year operating history. So if you formed a business 3 years ago from today, you're eligible for lending. If you bought a business today and the business has been established for more than 3 years, then also you should be eligible for lending. That's all for me. Thank you.
Awesome. Let's go with Fernando, Gustavo, and Juliet.
Good morning, Fernando Ponce with Primary Funding. Very similar to Andrew, we're an asset-based lender. We focus primarily on factoring your receivables, purchase order financing, and we will do some asset-based lines of credit as well. We will take real estate as collateral also, so that's something we've been doing a little bit more of. But essentially, if you're in a B2B industry or you're selling a product or service to the government, we're typically going to be a good fit. We like to position ourselves as a bridge to the bank, or in a lot of situations this year, we've been a kind of for companies that have hit a rough spot, we've been kind of a takeout, and then hopefully we're going to work with them to get them back to bankability here over the next 1.5 years or so. So yeah, that's our role. Thank you.
So I'll follow up, Fernando here. My name is Gustavo Bedart. Good morning, everybody. I work for an organization called Civic Community Partners. I oversee the economic and community development activity for what is a nonprofit lender. You may hear from my other colleagues as well, the acronym of CDFI. It's a Community Development Financial Institution. We're nonprofits. We do lend, but we are not necessarily depository organizations or institutions. So we are chartered to do special loans, community, outside the box type small business loans, if you will, that typically may not be ready for the bank per se, but we definitely want you to be banking with the more established financial institutions eventually. We definitely need you to be banked with them. But our role is to provide a little bit more lenient underwriting. And so we are, by way of background, Civic is the former redevelopment agency for the city of San Diego. So we understand community development very well. We do community development type loans. So if that's something for a sidebar conversation, we can help you with that in case you're developing housing or community-based benefit type of facilities in the community. I'm here to talk about our Building Business Success Program, which is a product specifically geared to service MBEs and DBEs and women's, all the disadvantaged categories that the SBA department has from a perspective of trying to help LMI emerging communities be more successful. The product is geared to these same businesses, these small businesses who are trying to procure contracts with anchor institutions. So you may have, as an example, an entity that is maybe doing small rehabs for homes, and then all of a sudden decides to do and is awarded a contract with, let's say, the school authority. So you might have some initial capital that you need for more materials, more labor, and even just carrying the burden of waiting to get paid by some maybe a government entity or a larger anchor institution, as I mentioned before. So our working capital is there and available for you so that you might be able to carry the burden and start up strong in hiring and buying materials. We're not necessarily FICO driven. We do check credit reports to see if you have any egregious issues. I've mentioned that we're very familiar with community development and construction. So that would be, as an example, mechanically, right? So we're not necessarily looking at a FICO score, but the capacity for repayment. And so your procurement schedule is very important to us. Other than that, I'll leave my information on the chat in case you need to follow up with some additional Q&A. Thank you.
Good morning, everyone. My name is Juliet Terman. I'm a business development officer with Accessity, and Accessity is a nonprofit micro lending organization. As Gustavo so mentioned, we are a CDFI, so a term that you will hear here coming up. But we have been around for 30 years. We are local here in San Diego, and we lend to businesses in Southern California, and we do provide loans for both startup and existing businesses. So startups can be pre-revenue, it can be a business that just has a business plan and an idea and is looking to start a business. We do require that you have another source of income to support the loan. Gustavo also mentioned a keyword, capacity. That is really what we're focused on. We want to make sure that we're giving you a debt that you can afford to pay. And we are providing a term loan. So you're getting all the money at once, and then you're paying it back monthly with interest. Our interest rates are between 8.99 and 14.99%. And that is going to be based on your industry. If you're a high risk business, we do lend to you, but you're going to have a higher interest rate. We also look at your time in business, and then we look at your personal FICO score. We don't have a minimum FICO score. I always tell people that you want to be around 600, just because that means that you don't have anything going on your credit, that, you know, you're not currently delinquent. You don't have any collections. Now, if you do have collections, they can be up to about $5,000. So we do have some leniency with having some past challenges, but we want to make sure that you're currently able to handle all of your financial obligations in the moment before putting you in more debt. And we work with most industries, you know, similar to what everybody else has said. We don't work with, you know, cannabis or any sort of adult entertainment, but we do work with those high risk businesses. Those are, you know, food and beverage, they can be retail, transportation. So we can lend to those businesses. I'll also put my information in the chat. I work as a business development officer, so my job is to walk you through the process of getting a loan, having a conversation with me to see if you're a good fit for our organization and our lending program, and vice versa. And then I'll help you go through the process and help you submit documents, provide any feedback on your documents that I may see. I've been with Accessity for 6 years now, so I pretty much know what we're looking for. So definitely feel free to reach out and have a conversation with me if you feel like this is a good program for you. Thank you.
Wonderful. And last but certainly not least, Miriam, thank you for your patience.
Good morning, of course. Yeah, so this is Miriam, and I am with CDC Small Business Finance. We have been around for 40 plus years, and we're mission oriented as well. We're a CDFI and also a CDC, a certified development company. So we do SBA loans, state guaranteed loans, and a few other options through our parent company, Momentus. The loans that I help with are from 20 to 350,000. It's an 8 to 10 year term. You can be a startup, you can be an existing business owner, or acquiring, you know, either a franchise or just a mom and pop shop. So I help with all of those. Our mid-range loan tends to be about 150, but anywhere in that range of 20 or 350,000 we can do. Our interest rate is between 9.5% to 13.25%. And there's no prepayment penalty. As I mentioned, we're mission oriented. So about half of our loans are for startup businesses. So that can be pre-revenue, right? So you've been working with the Small Business Development Center and you have a business plan and projections and your experience of 2 years or more. And then, you know, you come to me and then I might be able to help you, you know, start your dream business. So that's a little bit about what we do. We do have different, other than the SBA loan programs and the state guarantee programs, we also do commercial real estate and other parts of our company, and our loans can go up to 20 or 30 million in gross revenue. So our mission is that either you fit kind of one of those target markets that SBA is looking for. So you're either, you know, woman-owned business, you're Hispanic, you're African American, your business is located in a low or moderate income area, or you're maybe none of those, but you just have a startup business or a traditional lender has said no to you. Those are all reasons that I'm happy to see if I might be able to help you. Been doing this for 20 plus years. We all work together. Everyone who's talked, we refer back and forth to each other all the time. And help each other. So we're very blessed here in San Diego to be, we really like to partner with each other, and we're looking out for you as a business owner and what might be a best fit for you, which isn't always necessarily ourselves. So I do suggest, if you have the time, that in, you know, through listening to us, you hear, you know, one or two of us that sounds like might be a good fit, you know, reach out to multiple people. And if not, we will connect you to each other if we're not a direct good fit.
Awesome, Mary. We're just gonna start from you and work our way back up to the top. So let's double click a little bit more on the application process. We've talked about the different types of loan or different types of products overall. Could you go a bit more into the actual process of working with you as a lender? the steps to take, how long it typically takes, and then, you know, the lending landscape is constantly changing. You know, are there any special programs or business types that you're able to, you know, offer right now, or that you're ideally, like, you know, working more with as far as business types, or yeah, go ahead and take it away, Miriam. And Miriam, Juliet, and Gustavo, in that order.
Okay, yeah. So I always recommend that borrowers not apply online, only because your credit will be pulled. And just like, you know, anything, if you're going to get, you know, a new fridge or your bathroom redone, you know, talking to people and being, you know, connected with people that know people that are trustworthy is good. I mean, everyone in our company is trustworthy, but you know, experience goes up and down. And so I always recommend, if you get referred to me, for us to have a conversation first, for you not to apply online, because sometimes that could be, you know, just a credit pool that's not necessary. Maybe you're not a good fit for me and you're a good fit for, you know, Juliet at Accessity, or Tariq, or, you know, just someone else. So I will help you, you know, talk to you for 10-15 minutes to see if we're a good fit. And if we are, then I will send you a personal link where you can apply. Once you upload everything, I ask my clients to let me know that I have a complete application. And once it's complete, in about 24 to 42 hours, I'll let you know if you, you know, are pre-qualified, and what else we might need to do to button you up to go to underwriting. Underwriting has really improved their turnaround time. Their turnaround time is 3 to 6 days to let you know if you're approved. I just got, actually today, an approval that I submitted yesterday, and last week I got one done in 5 hours. Wow. So pretty amazing, pretty proud of our whole team. But yeah, so the process still depending on your use of proceeds. So depending on if you're going to get working capital, if you're going to get tenant improvements, equipment, operating capital, if you're going to refinance some debt, really depends on what you're going to be doing with the funds, and whether you're a startup, so that would be projections based, or you're an existing business. The least amount of time it would take would be 3 weeks, and the most amount of time I would say is that it should take is 60 days, unless of course you're doing tenant improvements, and that just takes a longer process for construction. So yeah, that's kind of the process. I'm happy to say that our turnaround times are getting much better on both ends. So yeah, I think that was your only question. As far as in the climate and if anything is changing, I mean, sometimes we have to temporarily close the door on some things. As far as right now, restaurants, for another probably 2 months, we won't be opening that industry up. Other than that, any of the simple industries per se are not open. So no adult industry, no marijuana. We just reopened transportation, which we had closed for almost a year. So that's open. So we're pretty open. I could tell you, I do, you know, quite a bit of loans, 7 to 12 a month, that get funded. And I help everyone from, you know, a beauty salon to an engineer to an architect. I mean, construction, it just goes all over the place. So we're pretty open. Our underwriting is very different than traditional lending. We don't have a ton of rules besides, you know, some SBA rules, but our Community Advantage 7A program is actually pretty flexible, which is a huge blessing for, you know, all of, you know, small business owners, because we are able to be way more flexible. So for example, we do not have a minimum credit score requirement, which is, you know, still, I always get excited about that. So there's no automatic declines. If you have a charge off, or even a late from last month, as long as you have, you know, have paid, so you're on time now, or you've paid off that charge off, or you have a payment plan. I mean, we're just really, really flexible. We also won't put a lien on your home or a vehicle or anything of that sort. So anyways, if you have more questions, I'm happy to answer later, but I think Juliet was next.
Thank you.
Thank you. Similar process to Miriam's. I would say the one difference is we do a soft pull to your credit when you apply. We don't have a hard pull that is done at any point in the process. That's a change that we just made within the last year that I'm really proud of. And that feedback actually came from our team directly. So I was really happy to provide that service to applicants. So I would say, you know, have a call with me, schedule something just to see if our program is a good fit for you. Like, we'll probably continue to say on this call, we always refer to each other. So if you're not a good fit for me, I can send you over to anybody else on this call just to make sure you're getting the right kind of lending for you. But in that discovery call, it's usually only like 10-15 minutes. And it's just learning about how you want to use the loan, what kind of business you have, how prepared you are. If you need to go back, back one step and work with the SBDC, that's something that we always advise you on if you need to get a business plan together. So things like that. So there's a lot of feedback and education that comes from that phone call. And then if you are ready to move forward, we'll send you a link to apply. And then our process from start to finish, it does depend on the loan size, but I always just tell people 30 days is what you can expect from when you actually submit your application to when you get your money. The lower loan sizes, or I should say the smaller loan sizes, they're much faster. So we have a program up to $8,000, which is our rapid loan, meant to be rapid. It's about 3 to 5 business days. Our loans up to 25,000 are about 2 weeks. And then our loans up to about 100,000 are usually within that 30 days. So pretty quick turnaround time. I would say, if you call me and say you need a loan tomorrow, it's probably not going to work. So just make sure that you're keeping in mind that time frame that we have. And then special programs that we do have an Emerge program. It is a program that we received a grant from the federal government to help businesses that were not able to access any of the COVID relief lending. So we received this large grant and we're providing a loan grant combo program. It is at a fixed rate of 6.99%, which is lower than our even, lowest interest rate. So it's a really great program, and there is a 10% grant fixed into that loan. So if you pay the first 6 months of your payments, you do get a 10% grant back. It's a wonderful program. It's called our Emerge program. I will say that there are very specific requirements based on where your business is located. So if you have any questions about that, just reach out to me and I can talk to you one-on-one to see if you qualify for that loan. But yeah, thank you so much.
Gustavo, you're muted.
Sorry about that. I'll follow up here, Juliet. Thank you for that, Brandon. Similar to what you heard from Miriam and from Juliet, we're all 3 of us are organizations that are CDFI. So our underwriting criteria as far as collecting information really begins first with that interview, that discovery phase, to kind of appreciate the work that you're doing, the sources and uses of what you're trying to accomplish. The timelines are pretty similar. Obviously, the smaller loan amount, the little quicker it is as far as due diligence concerned. Our average loan size is about $100,000. So it does take about maybe 20 to 30 days to underwrite that and do some additional due diligence. Again, we don't get involved in perhaps what you've heard as sinful business. We're just not geared for that. And our expertise really right now lies around construction and procurement lending. So basically, that's what our conversation is trying to discover as far as if we can fit each other to assist you. And as we heard from our colleagues, we often refer back to each other if it's not quite a fit for us. With that said, as far as collecting information, tax returns, personal financial statements, year-to-date financials, a procurement schedule, if that applies. And it's not an egregious process. And I will echo what my colleague said about, don't just randomly go online to apply. I think you have an incredible access to lenders here on this call that are, work well together and have mission driven in the forefront of trying to accomplish, economic development and small business loans. So use the resources that are here. Highly recommend that. And one thing I'll just end with, be prepared. When we do have a discovery interview or a conversation, be prepared to answer some questions. It's often, unfortunately, when we ask, what's it for, or how much they need, some of the answers are very vague, or, how much do you have? And that's what I need. That doesn't go a long way. And, we're here to champion you. So be honest with your information, because eventually things do come up, whether it's a soft pull or a hard pull. And it's a lot easier to, upfront know these issues, some of these blemishes, so that we can help to overcome them at the beginning, not necessarily, in the lending underwriting process. So thank you, Brandon.
Awesome. And then home stretch, Fernando, DeWitt, Tarek, and Andrew.
Yeah, our process is, I think you're going to hear a lot of similarities here. I mean, really, we want to start with a conversation, just make sure it's a fit. Our typical underwriting is about 2 weeks, and it really just depends on what the asset is that we're looking at, right? If it's your AR, we're digging into that, making sure that we can leverage the receivables. If it's POs, we're looking at who you're selling to, looking at who the supplier is on that end now, because there's a little more risk on both sides of things since it's not completed work. And then if it's, inventory or real estate, those have their own, kind of intricacies that go into the underwriting process. So depending on what we're doing and what asset we're using, the process will be a little bit different. But in general, we're usually taking about 2 weeks from start to finish, from collecting a full package to getting money out the door. As far as, I believe you asked, Brandon, like trends that we're seeing in with lending. I mean, I'm just seeing that a lot of businesses are a little more strapped for cash right now, understandably. And capital continues to get tighter. I mean, we'll see if the rate cut comes, but even if that happens, I mean, who knows if that's going to increase the appetite for lending with a lot of the lenders. Is a lot of these businesses that I'm seeing are very leveraged. They have way too much debt they've taken on over the past couple of years. So that's one of the things we're seeing a lot of, and where we're having to get creative with a lot of different asset groups to really, to get the amount of capital we need to kind of get people out of these situations. Thank you.
Awesome. Thank you. DeWitt, talk a bit about the step-by-step process of working with your bank. How long can it typically take? Any best practices, programs, or business types that you focus on?
Yeah, so with us, similar to everyone else, it kind of starts with a phone call where the business owner speaks with me or speaks with someone on my team and kind of lays out, here's the business, here's the history, here's what our growth plans are. And to execute on these growth plans, what we really need is a $100,000 loan or a $5 million loan, whatever it might be. So it starts with a conversation, and then generally the banker's going to give the business owner some guidance on, well, here's the best way that we can try to accomplish that, whether it's this loan program, that loan program. So going up to stuff that's lower than 150,000, it's really easy. It's typically a 30-day process from start to finish. So if a business owner wants to apply for $150,000 term loan to buy a piece of equipment or $150,000 for a line of credit, we would still have that first conversation. After which, if the business owner and the bank decide it sounds like we should be able to move forward, we would send over an application. It's a 2-page app. The business owner fills it out, returns it to us with their most recent business tax return, most recent year-end financials, year-to-date financials, and a couple months of bank statements. But that's it. So going up to 150,000, we don't even look at personal tax returns unless you want us to. We don't look at personal financial statements. It's really strictly based on the most recent business tax return, year-end financials, year-to-date financials, couple bank statements. And that process, again, start to finish, if you called us today and you're qualified, you're eligible for lending today, you return an application tomorrow, we should have an approval over the first week in September, and theoretically funding the loan and signing loan docs probably the first or second week in September. So start to finish, kind of a 4-week, 5-week process. Everything above 150,000 does require full underwriting, which means 3 years of taxes, 3 years of financials, personal financial statement. That takes a little longer than 30 days, not a whole lot longer, but I would say fully underwritten stuff with us takes about 45 days. If it involves real estate, whether it's real estate as collateral or whether you're buying, like a purchase transaction, you're buying a building, those will take longer. So those are usually more like 45 to 60 days. And the reason it takes longer, when you buy a building, there's a lot of due diligence that has to be done on the building, like appraisals, maybe environmental reports, depending on where the building is, maybe phase ones, which just kind of tell us like what's under the surface, is the any concerns about chemicals in the soil. So real estate lending takes 45 to 60. And let's see here, special programs. So if you want to apply up to 150,000 and your business did less than $1 million in sales for the prior calendar year, we'll waive all loan fees. So typically the loan fee is 1% up to 150,000, but if your business does less than $1 million in sales for the prior year, we'll waive that. Any other special programs? Not really any incentives that we offer for small businesses. Really just waiving loan fees if your business does less than $1 million. And that's it for me, Brandon.
Thank you.
Okay, for Marble Bridge
Oh,
Fund, yeah, I'm sorry. Go ahead, Fran.
I think Tarek was next, and then you, Andrew.
Okay.
You're going to be,
Okay.
yeah.
That was 3. Go ahead.
That's all right, no worries. Yes, so in terms of our programs, we work very closely with the SBA, and typically from a cash flow perspective, we only really require 1 year of cash flow. Many other lenders typically require 2 years, and we can go as low as sort of 1.05 debt service coverage ratio. So we're able to do a lot more on the SBA side than perhaps some other lenders. From our own kind of risk perspective, we portfolio all our loans, which means that we own them. We don't sell them out. So typically, when it comes to a commercial real estate transaction, for example, if they come in at a certain rate today, as long as the loan is in good standing, and when rates start to come down, hopefully, we can always look at doing a rate modification instead of a refinance. So that's one of the things that we can do. The other thing as well is right now, some people may or may not be familiar, but the SBA currently has a fee waiver under the guarantee program on loans up to $1 million. I was actually told last Friday that that has actually been extended through until the end of September 2025. So you can use those funds for building purchases, acquisitions, working capital, equipment purchases, all the rest of that kind of stuff. So that's something that's there. In terms of timeline, I've been able to close an SBA loan in 37 days for a building purchase. I think it's a company record. So I give the full credit to my client because she was awesome getting all the information over. In terms of sort of regular loans, we do application only loans up to $50,000, and typically you'll get a response back within 24 hours. And on our equipment financing side, if you're purchasing equipment, you can do an application only product up to $200,000, and normally we get a response back within 3 to 6 hours. So ultimately, we can work as quickly as you provide the information across to us. In terms of our requirements and in terms of what we require, one thing we would ask for is transparency. I know a few of my peers on this call have kind of mentioned it before, but please be honest, because if you're honest and we're aware of a situation, we can try to go to bat with the underwriter. But if you kind of withhold information and then it comes out, then unfortunately it's a waste of everybody's time. And obviously that's what we don't want to do. We want to make sure that we're aware of everything so that we can provide a story to the underwriter so that they're aware of it and they support the request. Thank you.
Okay.
You're up.
So at Marble Bridge Funding Group, and I mentioned this earlier in our conversation, basically you would speak to me, and because I do the underwriting directly, which speeds things up, I can figure it out in a phone call, usually with you, whether we can fund you or not, or or maybe it's one of the other lenders here, and I can point you in the right direction. From gathering a package to funding could be 10 days. So if we have everything we need, you're ready to go, we're ready to go. It'll be 10 days. And upon signing, you can submit your first funding request. We have the ability to fund up to $5 million a month, though I rarely see that. A lot of clients need 100,000, 200,000, 500,000, $1 million. Fairly easy to do that for you. Gathering the package, and like many of the lenders here, we will gather financials, we will gather tax returns. Everybody here does background checks and all those things. So You know, you want to be totally upfront and honest about any issues. But my underwriting is some of the most liberal within the panel here. I can do clients that got bankruptcy charged 6 months ago. If they have tax liens, sometimes I can work with that or with judgments. If they have SBA 7(a) loans or they have IDA loans, I know how to work with that as well and potentially fund you on top of that. Something that if you haven't explored, you should explore if you're a receivable-based business. So my businesses are like contractors. I'm one of the few in the country that will do progress billing, milestone billing. I do software companies, hardware companies, engineers, architects, manufacturers, trucking industry, consultants of every type. We get it done very, very quickly here. And we work with startups. We just signed a startup last week that got a $1.8 million contract with City of Oakland. They'll have their first invoice at the end of the month. They'll cover payroll for 1 month, and at the end of the month, they're out of cash, and they want to fund that invoice that covered the next month, so forth and so on. And it's a very lucrative contract, and it was a very easy fit, and we got them done in 10 days, and we're just waiting for the first invoice to be submitted. Invoice finance, receivable finance, PO finance is something unique to most small businesses. You may have some general ideas, but you really need to spend time with us to learn the business. So what I'm really good at is teaching, and I will make you an expert in our business, and I will help you understand it. And together we will both figure it out whether it's a fit. But we can move very, very quickly. And if you have potential to grow and grow and grow and grow, this is the right fit for you. You should really explore it. That's it.
Awesome, Andrew. Just start with you, and with the time left, you know, the other lenders can jump in. Just last thoughts on avoiding pitfalls, success strategies, and if you want to give a real world success story too. I know everyone's got one, so we want to start with Andrew, and if any of the lenders want to raise their hand, get to you as well.
So from a real world success story, there's so many that we're bringing in at this point. But we have a minority small business that we were funding. They needed rapid growth. They couldn't get the banks to get them what they needed. And we've been funding them for about a year, and they just won an award with the Black Chamber as the Small Business of the Year. And we were invited to that party, and we become very good friends personally with the client. So we've gone beyond the relationship of just a lender, which is one of the things MarbleBridge is known for, is to be very close to our clients. So because we do a lot for them and a lot of guidance. So that's a quick success story. And what we're doing, and you know, from the transparency point of view and the pitfalls, I think for small business, you know, definitely, as we all know, work with the SBDC. They have so many different resources. It's all free. I just can't stress it enough how great they are. And these are SBDCs up and down the state. They're all over, and they do a fabulous job. There's nothing like them in the marketplace. And from that end, the lenders on this panel, the SBDC knows us up and down the state, and they know our reputations, and they know we're good. So there are a lot of lenders out there, what I call MCA loans, very high interest loans, that are constantly hitting you up. Do everything possible to run from them. It is nothing good comes out of it. I'm sure Fernando has seen his share of these, you know, highly leveraged companies. I've had several. Again, in the last week, I couldn't get one out. He was so deep in with them. I brought him to a CDFI, and they're in the process of seeing if they can help pay him off. And then he's also going to join up with me. So we're going to do a joint venture with the CDFI. So he has the, you know, get rid of the high debt, replace it with a much more reasonable debt, and then use me for the growth that is in front of him. So there's some interesting solutions that can be had, but you have to talk to us to understand what's available in the market and where we all fit in.
Awesome. Would any other lender want to jump in with some best strategies and success story?
Yeah, Brandon, I'll just join in. I mean, I just want to preface again, be prepared. You know, sometimes people are in urgent, you know, have an urgency to get the money, and you know, it takes a while, as we've heard from all the peers on the call. But if you can help yourself by having all the information, your financials ready, it goes a long way. I think none of us here want to take a long time to provide a no answer. We want to be able to give you a quick response with either a yes or a no. And the only way you can do that is by giving us what we need to make a good decision, a qualified decision with the information you can provide us. Again, I would stress avoid, if you can, any type of predatory lending opportunities that may come up, online, these pop-ups while you're out there looking for capital. You all of a sudden the algorithms start giving you all these things that may be unique opportunities, but you've got a plethora of individuals here that have worked closely with the SBDC, and I can't stress what Andrew said enough. Get your some coaching, some mentoring through the SBDC. It'll go a long way. So kudos to everybody on this call, hearing from the lenders and obviously working with the SBDC. Success story, I would just say we're very proud of helping MBEs and DBEs in general trying to fulfill procurement opportunities. So we're very excited about that. We don't necessarily have a favorite anymore. We've done quite a few, and it's like saying which one's your favorite kid. You can't really pick a kid. Well, maybe you can, but in this scenario, maybe you can't pick a favorite business. They're all important to our communities. Thanks, Brendan.
Well, yeah, I don't know what else to say than picking your favorite kid. Pick your favorite banker. I just want to reintegrate, the joy of having these Meet the Lenders is this is a very approachable community. And I know sometimes it can be a little intimidating or stressful to talk numbers or talk financials to someone that you don't know. So the purpose of this call again is to demystify that and to and also make the introductions, which can happen right now or after this call as well. But overall, I think some of the themes I constantly keep hearing is learn what preparation is, be prepared. A lot of the timelines are really contingent upon you as a potential borrower having your paperwork in order. Be honest and forward with your situation so that the lender can be an advocate for you versus a detective trying to figure things out. And overall develop that relationship because successful entrepreneurs have a team of that behind them, and that includes a really solid banker that they can go to in good times and bad and work through situations as the market continues to change. They have someone that's in their corner and trying to help them figure it out and maybe has the foresight of what's to come before they would as well. So with that, just want to say thank you for everyone's time. Again, the lenders, your time is extraordinarily valuable. Really appreciate it. And that will conclude our Meet the Lenders for this time. So thank you so much.